Time now for our weekly ETF Friday segment. ESG ETFs, well, they're on a roll, taking in billions of dollars last year and billions more this month alone. Here to discuss is James Seyffart, Bloomberg Intelligence ETF analyst. So we talk about ESG investing from time to time. We talk a lot about ESG investing. How big has the growth been?
Yeah, so when you talk about ESG investing, the hype is real. The media has been talking about it for a better part of a decade. And if you look at news stories mentioning things like ESG, socially responsible investing, impact investing, it's been a hockey stick growth in mentions. The other area where we're seeing hype is advisor surveys and investor surveys, where everyone basically says we plan to use ESG principles, and they've been saying it for years, but the money just hasn't really followed. But that's kind of starting to change.
How much money are we actually talking about here?
Yeah, so in 2019 alone, ESG ETFs took in $8 billion, which was a new record for them. The previous year was the record at $2 billion, so it was a big jump up. And in 2020, we're already at $4 billion, basically. So it's a big deal, but in the grand scheme of things, it's not that big. So if you consider ESG ETFs to be smart beta, they were middle of the pack in 2019, but in 2020, they're leading the way.
So where is all of the money coming from, James?
So that's the crux of the issue here. Most of this money, almost all of it, is coming from institutions. We saw a story yesterday where the Church of England is going to put $800 million into an index that tracks companies that are going to follow the Paris climate change agreement goals. And then if you look at the money from 2019, a huge chunk of it came from one Finnish pension fund that seeded a DWS ESG ETF and then an iShares ESG ETF. And then 2020, the reason 2020 is so big has to do with Larry Fink's BlackRock letter about getting behind ESG investing. Mm-hmm. Basically, they moved a lot of client assets into two ESG ETFs that have totaled over $3 billion in flows so far in January.
Are all ETFs in the ESG space created equally? How do you differentiate between these?
Yeah, so there's a ton of ESG ETFs, especially on the equity side. There's even a bunch on the fixed income side. But the way to look at this is basically there's a spectrum, and on one end of the spectrum you have inclusionary strategies, on the other end you have exclusionary. Inclusionary is like, I want to follow these principles, I'm going to go after companies that do the best to capture these principles I care about. Those tend to be more concentrated. The other end is exclusionary, where they'll take a universe, say the S&P 500, and say, I'm going to exclude the worst stocks, the worst actors in ESG principles, and that tends to give you a more broad-based allocation. And our view is that those types of products are going to be the ones that get the most client assets going forward.